Fashion is more than just pretty garments and the link to the arts, it's also numbers. Big numbers. The size of the fashion market is estimated at 1.8 trillion US dollars, and the big fashion conglomerates try to capture a lot of that market. As you may know, I also have a business background, and when we think about financials or numbers, very often we think it's boring, too difficult, some people are overwhelmed, but we don't have to be. It's actually not that complicated. It just takes a bit of reading and some skills. And in this video, I want to show you how to look into numbers related to the fashion market. Knowing the numbers is crucial, and I'm not saying here that you should become a full-on financial professional. Also, as a normal consumer, it's important to understand the basics of the numbers because there's so much information out there. There are videos, there are articles. It feels overwhelming, and very often I realize that they sometimes repeat each other. So one person starts and then this piece of information is just taken without fact-checking or checking the sources. Sometimes you get these doomsday scenarios, sometimes it's the other extreme because somebody is very subjective. But if you have a basic understanding of the facts, the numbers, this helps you a lot, not only navigating all this information, but maybe also when you think about purchasing your next luxury item, a bag or a garment that you particularly like. So let's start with the basics. I said a lot of information is out there. So first of all, we look at who publishes this information. Is this published by the company itself? Is it published by a journalist, a magazine, by an influencer? Always look at the source of this piece of information first. So for example, if a company publishes it, it's very often relating to the stock market because the company may be listed on the stock market, then there are certain requirements for them to publish. Plus, they also want to show you their share, and of course then they will highlight certain topics more than others. If you look at articles by journalists, these people may be subjective. We are all human beings, everybody is subjective, so also have this in mind. So if everything is subjective, what can we do to get the information? My tip is to look at the financial data. First of all, companies that are listed at the stock exchange publish presentations. So this is the first step to get an overall idea of what is going on. But more information is actually in their financial statements. Scary, I know, but they're actually not as scary as they sound. And then also the notes to these financial statements. What are these notes? They explain how did certain numbers end up in these statements. What is the background of these numbers? How do you get these documents? All these documents are publicly available on the websites of these companies. And I remember when I started out in finance and I first saw all of these statements, I was also a bit scared or overwhelmed, but actually it's just a way of reading these documents. And now you heard statements and financial data. We are not going to go into the details today of these financial documents. This could be something that I can do for you in another video if you're interested. I would like to start with the revenue data. A lot of these listed companies have just shared the data on their revenues for the third quarter of 2024, so Q3 results. And we can look at these numbers and see what can we learn from these revenue numbers about the fashion industry overall or the companies that you may be interested in. And Q3 is actually a very good starting point because it already looks ahead what could happen in Q4. The last quarter of the year is usually the most important quarter in retail. Why is that so? We have Black Friday, Christmas, there's the Mid-Autumn Festival in Asia. So these events are also heavy revenue drivers. And before I dive into the details here, I have to do the boring housekeeping. First of all, it's a non-sponsored video. I'm just sharing my personal opinion and my research here. And secondly, this video is not intended as financial advice or any type of recommendations. If you have further questions about investments, please go and seek advice from a licensed professional. And lastly, my analysis is in euros, and the reason is that the companies that I'm going to talk about are listed in Europe and they operate in euros, so they publish in euros. And I thought to keep this video shorter because it's long enough the way it is, we just stick to the euros. At the moment, the exchange rate between euros and US dollars is not that different. I know a lot of you sit in the US and watch my videos, but I think you can also get the overall idea if we just talk about it in euros. And this is exactly what it is. Today we want to get an overall idea of this financial data. And as I said before, all of my research is based on publicly available information, which you can find in the investor relations part of all the websites of the respective companies. Let's start with the powerhouse, the French LVMH, run by the famous Arnault family. In 2023, LVMH made a revenue of about 86.2 billion euros. And LVMH owns many brands. So in the name we have Louis Vuitton, LV, Moet, Hennessy, MH. Louis Vuitton is the bag brand, I don't need to explain this to you. Moet Chandon is the champagne brand, and Hennessy is a cognac. But they also own Dior, Fendi, Celine, Loro Piana, Givenchy, and also they operate in other segments, not only the fashion segments that we usually relate them to. They also own Hublot, for example, the watches, and they recently acquired Tiffany. Furthermore, they also operate in retail. They also own Sephora. We already see a lot of brands, a lot of industries, so we have to make it a bit easier to understand everything that's going on. So this conglomerate publishes all their numbers according to 5 main segments. So we have wines and spirits, fashion and leather goods, watches and jewelry, perfumes and cosmetics, and selective retail. For example, this is Sephora that I mentioned before. LVMH is listed in France, so that's why we have access to the documents. These documents for the third quarter were published on the 15th of October 2024, and I went through these documents, and I also attended the live stream, the earnings call. An earnings call is, we could say, a conference call where these numbers are presented by the company, and afterwards financial analysts have the chance to ask their questions. So how did this work? Quite simply, LVMH announced their revenue results for the past 9 months of 2024. The revenue reached 60.75 billion euros. This is a lot of money, but then it is being compared to the previous year. You take the same time period, so the 9 months of 2023, and compared to that, the revenue was actually less. One detail that I would like to explain here so that you get the full picture, LVMH in their presentations talks about organic revenue. What is that? This is revenue that a company makes by their own operations. It's not inorganic revenue. That would be if a company buys, for example, another company and then makes revenue through that. So here, focus on organic revenue. And in their presentation, they call it stable growth. They say 0% difference in revenue. So now you say, how does this happen? LVMH actually attributes this to currency effects. Now we have the big picture. We know what is going on at the group level, but to understand it, we need to go one level down. We need to look at the segments that I mentioned before, because they also have different characteristics. And this is also the first time where you will see that it is very important to look at the numbers, but also put it into context and see the bigger picture. Because look at these graphs, you probably immediately notice that 3 segments are down, and the biggest movement is in wines and spirits. But be careful, don't misunderstand that. You have to look at the pie. And what I mean with this is, how big is each segment? Because I don't need to explain this to you. If a pie is bigger, 1% of this pie is also bigger than 1% of a smaller pie. And in this case, we need to understand that wines and spirits is much smaller than fashion and leather goods. Fashion and leather goods makes up for 29.9 billion euros, while wines and spirits is 4.2 billion. So we already see the difference. So we see that the major driver for LVMH is fashion and leather goods. And I also listened to an interview with the luxury market analyst Lukas Solka, who also said at first sight, LVMH is a company that owns brands across industries. I've said this before, but given this large share of the fashion and leather goods, it's actually not as diversified as we would expect it to be. So looking at this development in all the segments here, I would like to point one thing out. I just said 3 segments are down, and then look at perfumes and cosmetics. This had positive growth. And this is something where I would assume perfumes and cosmetics in more difficult economic times is a bit easier to perform. So that's also relative. So you have to think like this. a lot of these companies also depend on the so-called aspirational customer. So this is not the customer who can afford the haute couture, but they would buy a bag that is in a lower price segment, and very often these aspirational shoppers, they also go for perfumes and cosmetics, because you can buy a lipstick or a nail polish and still own part of this brand. And there are actually studies and articles that say in more difficult economic times, very often perfumes and cosmetics see a growth, because this is where the aspirational shopper goes to. This was just my idea when I saw the numbers. Maybe you have a different idea about this, let me know in the comments below. And we can assume that LVMH is now also focusing on this segment. Needless to say, they are growing there, so why wouldn't they look into this? The only thing that is a bit tricky with perfumes and cosmetic compared to their big share fashion and leather goods is that competition is very fierce. You have a lot of big brands, you have a lot of smaller brands, so it is maybe even tougher, I would say, than fashion and leather goods, which is already a very, very competitive market, to succeed in that. But given the positive momentum, I understand why LVMH would look into perfumes and cosmetics more. When the data was announced, especially the fashion and leather goods segment, a lot of people were surprised, and some even said LVMH didn't come up to expectations. And this is something that I would like to draw your attention to. Expectations. Financial markets are driven by people, and people have expectations, and this also influences a lot in the market. And similarly here, there were expectations from the outside, from financial analysts, from journalists, from consumers about the LVMH share or the LVMH performance. But this was rather from the outside, I would say, than from the inside. I found it interesting that so many people were surprised, because if you have been looking at the numbers, it was actually somehow approaching. You could tell just by looking at the numbers. Looking at the year 2023, so last year, in the first 2 quarters, there was still double-digit growth. But then from the 3rd quarter onwards, it fell under 10%. And then at the beginning of this year, Q1 2024, compared to the same quarter in 2023, there was only 2% growth. In Q2, there was only 1% growth. And now for Q3, we see minus 5%. So if we look at the revenue at the end of September 2024 for 9 months, compared to the same time period in 2023, there's negative growth. We see minus 1%. And what does this mean in absolute numbers? We are talking here about less revenue of about 990 million euros. And because my focus is on fashion and luxury, I would like to draw your attention also to watches and jewelry, because we see a similar development there. It also came over the past quarters from double-digit growth to negative growth. I would even say, or I interpret it like this when I see the numbers, that it already started a bit earlier. Now the big question, what are the reasons for that? And it's very, very difficult to answer. Of course, this was also one of the major questions during the earnings call. So overall, we can assume that first of all, the economic climate globally contributes to this. There was the pandemic, then after the pandemic, sales took up again. There was more enthusiasm. I interpret it in a way that I say, okay, during the pandemic, everybody was at home. Nobody really thought about fashion and all that stuff. And then once the pandemic slowed down a bit and people could do more outside, they enjoyed fashion again and they started spending again. I also talked to industry experts in jewelry and watches, and their feedback was the following. They say that during the pandemic and immediately afterwards, there was this peak. People couldn't travel, so they bought another watch, for example, or they bought 2 or 3 watches, and now they have bought so much that they are kind of saturated and that sales have slowed down. I cannot say what are the particular reasons for this LVMH development. These are just my ideas. Of course, I do think that the overall economic and political climate also contributes to it. One big driver for the revenue is Asia, in particular the Chinese market. LVMH themselves in their earnings call referred to that market as mainland China. I'm not going to do here an overview of the Chinese economy. First of all, this is not the focus of my YouTube channel. Second of all, it would be material for many other videos. What I would like to do here is to share my personal view, which is based on my experience when I lived there and also how I follow the news and developments. How I interpret it is that China opened up in 2001 when they joined the WTO, the World Trade Organization, and it made it easier for foreign companies to operate in that market. And it is a very attractive market. It is a big market, but it is also a very difficult market. And I think a lot of the brands initially benefited from being new. Some adapted the local strategies, they adapted sometimes to the local taste. Some probably also benefited from this aura of the European/American heritage. And it's quite natural that people are interested in it or they want to have it because it is new, it was not available before. So there was this hype around these brands. And I think over time also Chinese people became more and more used to these brands. And now they also want to see different designs, innovation, whatever. So this is just my personal opinion of this. Let me know in the comments below what you think about this. What is now the issue? For a very long time, it was seen as a cash cow. It had very good growth rates. This is not exclusive to fashion. Of course, this market is then more interesting than, let's say, Europe or America, where the markets are already more saturated. So kind of naturally in a global economy, brands focused on that market. But then COVID came. So everywhere there was a new situation, and since then the Chinese market seems to be only slow in recovering. So how can we analyze the numbers then for LVMH? When we look at LVMH and Asia, I would say that this development is also nothing new. It was slowly in the making, similar to what I said about fashion leather goods and watches and jewelry, because in 2023 the growth rates in Asia, excluding Japan, were double digit. And then 2024 started. It started with negative growth in Q1, so minus 6% in Q1. Q2 was minus 14%. And now in Q3 we see minus 16%, all compared to the same time periods in 2023. And I also closely followed this discussion, which had already started earlier this year, and especially during the half-year results in July. A lot of people were actually talking about, yes, Asia is decreasing, the growth is slowing down, but we see positive development in Japan. And where does this come from? The assumption was that Chinese travelers would benefit from currency effects with the Japanese yen and then travel to Japan and buy luxury products there. But again, I need to use the analogy of the pies, because the pie for Japan is 5.5 billion euros for the 9 months of 2024, and compare this to Asia excluding Japan, 17.6 billion euros. So again, 1% of a smaller pie versus 1% of a bigger pie. I think you get the analogy. And this pie analogy becomes very clear when we look at the absolute numbers, because this change in revenue, this growth in Japan makes up 1.1 billion euros, about 1.1 billion. And then we compare this to the loss in the Asian region, excluding Japan. We are talking here of about minus 2.3 billion euros. So I think you get where I'm coming from. One thing I'm not 100% sure is how LVMH defines their regions. Is it a geographic approach that they say everything that's sold within one country, let's say China, is the China region, or is it rather tied to the nationality of the shoppers? I assume the second one, because during the earnings call, LVMH referred to the Chinese consumers. They also mentioned that they purchase a lot abroad. They called it offshore shopping. If I remember correctly, I think they said something like 45% of the shopping of the China region is this offshore shopping, but please don't pin me down on this. I would need to double check this. But based on these arguments, I actually think they tie it to the nationality of the consumers. But I do find it a bit difficult, and obviously I'm also not the only one who has issues with this, because an analyst, I'm sorry I forgot the name and also the bank, but one analyst asked this question during the earnings call, and the answer of LVMH did not really give an answer to that problem. So if you know more about this, please let me know in the comments below, because I would like to understand this better. And another thing making assumptions a bit difficult is that LVMH publishes data about the regions, but they don't publish the countries of these regions and the impact. So we don't really know how much is China actually contributing. A lot of people assume that China is a big chunk of that business. It could also be India. I do think we may see some movement in that segment too, but this is another factor making assumptions from the outside a bit difficult. And this also relates to the fact that, as I said before, these documents are for the stock exchange and there are certain standards that have to be met. And some companies publish more than others. Some do the bare minimum, some give you a bit more, some are very open. This depends on the company and what they actually want to publish, as long as the baseline is met. And there's one last thing which I would like to discuss with you, so you can also let me know in the comments below. When we look at the breakdown of the regions, we see that 39% is made up by Asia and Japan, and 50% is actually US and Europe, including France. So I find this interesting that everybody is focusing only on Asia. Needless to say, I said it before, this is where the big growth was going on over the past years. So of course it's an exciting market, I would assume, but I find it interesting that half of the pie is actually somewhere else. And I would like to know what European and American customers feel about all of this, because when we think about all of these brands, they are heritage brands and they usually or very often started with a designer. This was before the world became globalized, and I don't think that Christian Dior himself, as an example, had to think where is his design liked and how. He designed something and then he found customers. But in a globalized world, I assume businesses have to think more like, will this product be popular in Europe, in America, in Asia? Will it work everywhere? And I wonder how consumers all over the world feel about these developments. I talk to many people who shop with these brands, and one feedback that I very often hear is that they feel it's not so much about creativity anymore with many of the brands. It's more about accessing certain markets, accessing certain tastes. I don't know what you think about this. It's an interesting thought and I would like to hear more about your point of view. Let me know in the comments below. Now, what can we take away from this analysis? First of all, I would say we see there's a decrease in the revenue for their biggest segment, fashion and leather goods, and we also see Asia impacting also their numbers. Are you still there? If you are, congratulations, because this was the biggest and longest part of this whole exercise. I wanted to give you more detail on LVMH, and now I'm going to compare it to other companies, to Kering and to Hermes, so that you see what is going on with other brands or conglomerates in the market. Let's look at Kering first. They are also listed in France and they are linked to François-Henri Pinault, who is also the husband of Selma Hayek, by the way. And they are another big conglomerate. Their revenue in 2023 was about 19.6 billion euros. So a high amount, but compared to the 86.2 billion by LVMH, we see these are different sizes of giants, we can say. And the overall developments that I just discussed for LVMH also seem to be there at Kering. The way I interpret it, because you can see that at the end of September 2024, compared to the same time period in 2023, revenue decreased by 15%. And a lot of people say it's due to the development at Gucci, and this could be a valid point, because also when I looked into the numbers, I saw that Gucci makes up 9.9 billion euros of the total revenue, so we are at about half of the group's revenue, which is driven by Gucci. It is a bit difficult to say where these difficulties for Kering and especially Gucci are coming from. There are a lot of views on this. It's a very polarizing topic. Some people say it's because Alessandro Michele left the brand. He's now the creative director at Valentino. I recently did a video about his most recent collection with Valentino. I find it a bit difficult to tie the issues to only one reason, like the creative director. I think it may be a multitude of reasons. That's my personal opinion. Needless to say, under Alessandro Michele, Gucci was very successful. He had this very distinct design language. So obviously, when you look at the numbers, this was something that Gucci needed at the time. He was also very successful in promoting the leather goods, which are a big driver for revenue. And now some people say there's an identity crisis going on at Gucci. They have a new creative director as well, Sabato De Sarno, and people are waiting where this development will lead to. Some people say this rather quiet approach by the new creative director is not successful. I think it's a bit early to judge that. And as I said, I'm not sure if the issues only relate to one brand or one creative director. In the case of Gucci, it's a fashion brand, a leather goods brand. And this market, we know there can be a hype and the next day the hype is gone. So maybe this was a reason, I don't know. This is just my personal view on these things. And then also we need to look at Kering overall. Yes, Gucci is a very big part of their portfolio, but also the other brands were not performing that well. Saint Laurent is down 12%, Balenciaga is down 14%, all compared to the same time period in 2023. One of their better known brands that they showed in the report with positive growth was Bottega Veneta. They grew by 5%. In this time period. So this is a positive development, and I'm already curious about what is going to happen in the last quarter of this year for Kering. At this point, I wanted to present you the numbers by Richemont, another conglomerate. I mentioned them in another video about Delvaux. They acquired this brand, the bag brand from Belgium, but I saw that their financial year differs from the others, so I didn't want to make it too confusing here. The video is long enough as it is, so let's just jump to the last one, and I would say this was an outlier. It's Hermes. Hermes is also listed in France, and why do I call them an outlier? It's because their results were better than the others, we could say. Because, for example, when we look at their leather goods segment for this time period at the end of September 2024, they reported plus 17% growth, which is in line with the results from 2023. I interpret this as positive, but when I looked closer at the numbers, I also saw something else that I would like to share here. When I looked at the development in Asia, because after analyzing the others, I wanted to know what is going on for Hermes in Asia. The Asian region at the end of September 2024 grew by 7%. Again, Asia excluding Japan, which is still positive growth. But when we compare this to the overall growth in 2023, this was 19%. So we already see it's still positive growth, but a bit slower. And we can also see the same for America and Europe. At the end of September, Hermes reported 13% of growth in America. And when we compare this, it was 21% in the whole year of 2023. And we can see something similar also for Europe. And then also I looked into the segments because, as I said before, leather goods grew by 17%. As Hermes reported it at the end of September 2024. And this is in line with the overall growth of last year, as I said before. But two things that I noticed was, first of all, watches. At the end of September 2024, Hermes reported minus 6% of growth in the watches sector, and this was a sector that grew in 2023 in the double digits. And also silk at the end of September 2024, Hermes reported growth of 2%, and also this I find quite interesting because it also grew in the double digits in 2023. So overall, I think this is still a positive development. I just already saw things that I would like to monitor over the next quarters. Now, why is Hermes showing us these results different from the others? Again, it's difficult to say from the outside. I have a personal view on this. One reason may be that the people who can afford a Birkin bag, a Kelly bag, these very expensive bags, they still prefer to go and shop at Hermes, and they rather go there than to go to Louis Vuitton and buy the higher priced bags at Louis Vuitton. This could be one explanation, but I'm not sure. I would like to know what you think about this. And I also brought up the watches and also the silk for one reason. The watches, the development is similar to what was going on with the other conglomerates, what I said with LVMH, for example. And the silks, I have an interpretation for this. I think the silk segment may attract the aspirational customers because, as I said, the bags are really expensive. Very few people can afford that, but maybe somebody can afford 200 euros for a silk twilly or 500 euros, 600 euros for a silk foulard. So maybe this is the aspirational customer, and this customer is currently cutting the expenses. So maybe this is what we are seeing here. Again, this is my personal point of view, and please share what you are thinking about this in the comments below. And if you have made it until here, congratulations, we have made it to the end of this financial view on fashion. I hope you enjoyed this. I very much enjoyed it because, as I said before, fashion can be so many things, and it is very important to know the numbers. also to know what we are talking about and to learn more. So if you're interested in these videos, let me know in the comments below, then I can do more of them. And of course, if you have more questions or if you would like to discuss something in particular which I haven't mentioned here, also let me know in the comments below and we continue the discussion there. And if you enjoyed this video, yes, now it's the self-promotion. Please don't forget to hit that like button. Also subscribe to my channel if you haven't done so already. And if you want to read more about fashion, you can also head over to my website, thepinklookbook.com, and please also check out my fashion label, Pelagona. And if you enjoyed this financial view of fashion, I have another video for you where I discuss if luxury bags are a good investment. Thank you very much for joining me in this video, and see you in the next one.